like XPEV, they're planning to launch a low-cost electric vehicle brand that's ahead of what Warren Buffett had invested in years ago, Pete, BYD. BYD had been doing price cuts. Now XPEV is doing price cuts. And many of you might say, well, how big are they? Well, so the average EV out of XPEV used to be 200,000 yuan. Now they're going to cut that to about 100 to 150,000. It's somewhere between a 50% cut, 25 to 50% cut is what they're talking about, Pete. And yet the stock is zooming to the upside. It was gaining momentum while all of its competitors were moving down.
My first thought looking at this, John, was, well, now what's your margin turning into now as you're as you're moving in this direction? I don't see this being as positive as they do. They talked about the idea that they would still have virtually everything that they've always been putting into the other vehicles. And it sounds to me like they're just essentially just saying, you know what, we're just going to cut it by give or take close to 50%. We're putting it out there just so we can get the sales. So they're going to have to drive off of volume now. Now, I still think the margins are going to get absolutely crushed. So am I interested in this one? Absolutely not.
Well, and to give you guys, again, a yardstick or a measuring point for this, Chinese EVs from XPEV will be cut to between 14,000 US dollars and 21,000 US dollars. That's that 25% cut to 50% cut we're talking about. So they're much cheaper than anything you can buy in the United States. But that's for a host of reasons, not the least of which might be that they got to pass all our crash test standards and all the rest of that.